Is a UAW strike inflationary? Hey, it's Eric Osnes here with ericismybanker.com and CMG Home Loans with my weekly update on mortgage rates for the week ending September 15, 2023. Well, news hit Friday morning of a strike by the United Auto Workers Union against the big three, GM, Ford, and Stellantis. A strike by a major union can have varying effects on the economy and on mortgage rates. Initially, unemployment numbers will rise, and that could actually cause mortgage rates to fall. After that, used car prices will rise because there's no new cars to buy, and that will actually be inflationary and cause rates to rise. Further along, as union workers struggle to make ends meet, debt levels will rise, savings rates will fall, and later union workers will have to work on replenishing those savings and paying down those debts, which can slow the economy and cause rates to fall. The longer a union event lasts, the more impact this will have on our economy. So we just have to hope that this will get resolved fairly quickly. We don't need more trouble with our economy right now. Next week is Fed Week. The Federal Reserve Open Market Committee meets on Wednesday the 20th. They will make an announcement on interest rates. We expect them to pause and not increase rates. That's expected. That's already cooked into today's mortgage rates. But bond traders will still be watching the comments from the Fed so they can prognosticate what the Fed will be doing further along down the road. We don't expect a lot of drama next week. Fingers crossed. For the week, mortgage rates were flat to slightly better. Here are the national averages. Conventional 30-year fixed rate, 7.29%. That's up about 0.03 from a week ago. 15-year fixed rate, 6.64%. Those are down about 0.01. 30-year fixed rate FHA and VA, 6.75%, down 0.21 for the month. Looking pretty good on that one. Jumbo 30-year fixed rates were sitting at 7.34%. That's about up a little bit, just 0.04 from a week ago. When will rates start to fall? We were expecting rates to be lower by this time of the year, but it just hasn't happened because the economy is still just too resilient. Well, here's a stat to ponder. Only 4 times in the last 40 years has the federal funds rate exceeded the 10-year Treasury yield. And every time that's happened, we've gone into a recession within the near future. Today, in fact, the Fed funds rate is greater than the 10-year Treasury yield by the most significant margin ever. So hopefully that means that lower mortgage rates are just around the corner. Meanwhile, home prices continue to rise at a fairly modest pace. The latest report from Zillow shows home prices rising at a 7% annual clip. Why are home prices going up when mortgage rates are in the 7s? Well, because sellers don't want to sell. In fact, 82% of sellers are reluctant to sell right now because they have such a low mortgage rate on their existing mortgage. But many economists think that rates don't need to fall too terribly much before the sellers will be willing to list their properties. When that happens, the buyers will be there waiting, so best that you get your pre-approval set to go so that you're ready to go when those opportunities arise, right? Well, that's all I've got for this week. I hope you have a great weekend. Reach out if I can help. You can call me 206-915-3742. You can email me eric@ericismybanker.com or look for me on social media. Just look for Eric is my banker and you'll find me. Be sure to subscribe to my YouTube channel so you can get these regular updates, plus lots of other useful information and some cool videos as well. Have a great weekend. Talk to you next week.